Thank you everyone for coming back. When something on the floor got postponed to the afternoon floor, it meant that our thing that was scheduled for after the afternoon floor needed to move. Thank you, Maria, for being flexible with your schedule. If you could tell us about S95, that would be wonderful.
Great. Happy to do that. Maria Royal with Legislative Council. So S95 is a bill that incorporates various proposals that originated with the Department of Financial Regulation. It's kind of their annual housekeeping bill. Although there are, in addition to some technical changes, there are some substantive changes. And also both finance and commerce have proposed additional provisions as well. So I just wanted to make that clear. It's not all being generated from DFR. It is a very lengthy bill. It's about 84 pages long. I'm guessing you don't want to go through all of it. Maybe
I love sort of a high level scroll through and then any attention to parts that you know are in our jurisdiction.
Yeah, so I'll just say at the outset, I did send a copy to JFO to confirm what I think, which is that I'm not aware that there are any impacts to state revenue. There are no new fees and no adjustments to existing fees, for example. But having said that, I haven't heard back from them, and I'll now just kind of go through subject matter, what's in here, very high level. So, and maybe I'll skip over the most technical amendments, changes to cross references, things like that.
Thank you.
So, and that would be like the first section 1. Section 2 is just a clarification regarding the Vermont Insurance Data Security Law, a law that you enacted last year, just further defining the terms and the application for insurance companies outside Vermont, consistent with the intent, but again, just clarifying the language. Section 3, this just concerns if an application for a license to perform financial services is rejected by DFR, by statute, they're supposed to return to the applicant any amounts paid for an applicable bond requirement. That's stricken because those amounts aren't paid to the department, they're paid to an insurance company or the bond holder. So they return the bond, but they don't have any fees to return. That's a transaction between the applicant and most likely an insurance company. So again, just clarifying and conforming with the existing practice. Section 4, just updating language, providing notices of a debtor's right to cancel a contract, a debt adjustment contract by first class mail, as opposed to, or email, as opposed to telegram. Section 5 is just again, kind of a clarification to make sure that if a lender requires a depositor to keep a sum on deposit for a loan, that they can't do so, which is allowed in limited circumstances overseen by the commissioner. They can't do it in a way that will result in the consumer being charged what's higher than the legal rate of interest. That's basically the purpose here, and the language clarifies that. Section 6 just has to do with information that's submitted to the department. Yep.
Page 4.
Okay, do you want?
So I am actually not looking at the document.
Okay, great.
Page 4.
Summary. So
Everyone told me we're on page 4. Thank you. Sorry.
okay. I can pull up the document and try to.
That's okay.
Okay.
Everyone else keeping track of it.
So section 6 is just has to do with information submitted to the department.
95.
Was there a question there? Sorry. Okay. Just specifying that the department can keep any the department can keep proprietary information confidential. There's a similar section that we'll see later on, but again, information that the department collects, the more information that the department has, the better. To the extent it's proprietary information, they can basically ensure that it remains confidential. Section 7, this specifically concerns long-term care insurance. And there's an existing statute that requires the insurer to provide consumers notices of any proposed rate increases. And this is one of the sections that was added actually in House Commerce. Some of it was added in House Commerce, specifically with respect to the notice that goes out to the consumer. They wanted to make sure that the commissioner basically approves an explanation for why there is an increase. So the insurance company needs to submit that explanation for approval by the commissioner, and that explanation needs to be provided with the notice that goes out. And then the other change that DFR did propose was extending the time period for that notice to go out from 45 to 90 days. 45 is what's in statute now. So the consumer has additional time after the rate increase is implemented. Prior to the implementation, to do whatever, take whatever actions the consumer feels is appropriate. Section 7A also has to do with the confidentiality of records related to department investigations and examinations. The current law only applies to Title 8, which would capture insurance companies and other financial institutions. But as you know, the department also regulates securities, investment advisors, and those are in Title 9. So just expanding the scope of that general provision of law, which again is the practice, that just clarifying that the same confidentiality provisions would apply. Then sections 8 through 9. This is about 66 pages of the bill, R&D sections, but there are not a lot of substantive changes. The reason why it's so long is there are 2 guarantee associations authorized in Vermont. There's the Vermont Life and Health Insurance Guarantee Association. And there is also, let me make sure I get the name right, the Health Maintenance Organization Guarantee Association. So the proposal here does a couple of things. Apparently the health maintenance, the HMO Guarantee Association only goes into effect if the commissioner says it should go into effect, and that's never happened. So one of the proposals is to merge the 2 associations into one, hence taking 2 subchapters of existing law and combining them into one. That's why, and they're lengthy subchapters, so that's why it's a lot of paper. But in terms of other substantive changes, one of the big ones was, so right now, well, long-term care insurance is considered health insurance. However, most long-term care insurance is written by life insurance companies. Because it's considered health insurance under existing law, if an insurance company were to go insolvent, the assessments within the Guarantee Association would only be applied to health insurance companies, which doesn't seem to make a whole lot of sense if the life insurance companies are the ones who are writing all of most of the long-term care policies. So basically what it does is say, if there's an insolvency related to long-term care insurance, the assessment base that goes into the guarantee fund is expanded to include not just health insurance companies, but life insurance companies. So a broader base to collect money to cover any obligations of the guarantee fund. Again, so this only applies if there's an insolvency. Which is,
It doesn't change the sort of the fact that long-term care insurance is defined as health insurance rather than life insurance.
no,
Okay,
no.
great.
It's only applies in this particular instance. That's pretty much it, for this section, these two sections. Sections 10 through 12. This is another proposal that did not originate with the department. It's actually came from the Federal Home Loan, the Federal Home Loan Bank of Boston. So the Federal Home Loan Bank, it's a government-sponsored financial institution. They have regional banks throughout the country. It's basically a wholesale banker. They lend money to insurance companies and local regional banks. So for example, in Vermont, most of the banks and insurance companies get advances or loans from the Federal Home Loan Bank in Boston, as well as some large risk retention groups, associations or companies that self-insure through that model. So the proposal deals only with delinquency proceedings. If a member of the bank, the Boston Bank, is in financial distress, the proposal here basically would give the Boston Bank kind of a higher status as a creditor, and would exempt the bank from some of the automatic stay provisions of Vermont law. So generally, if there's a delinquency proceeding that's opened up by the department where the commissioner is the receiver, everything stops with respect to the insurance company or bank or whatever, but this only applies to insurance companies here. There are other provisions that apply to banks elsewhere, not addressed in this bill. So basically, the receiver puts a stop to all transfers of property, so that it can look at all the assets and then come up with a way of distributing funds to any creditors, right? The proposals here would allow the bank to be exempt from some of those provisions and to secure or to recover its collateral on any loans it gave to an insurance company immediately. And there are some additional provisions. And the reason why this was requested by the bank is because by having that additional security, Vermont members will be able to borrow money on more favorable terms. That was the impetus there, and it's similar to the way banks are also treated elsewhere. So I hope that wasn't too confusing, but again, these are changes that would just apply if there's financial distress or liquidation of an insurance company, and it would allow the Boston Bank to step in, collect its assets, and also potentially work with the company to maybe rehabilitate the company if that's possible. So,
Maria, only if it feels comfortable for you. I think we would be comfortable with you flying a little faster here.
okay, we're actually almost done.
Oh, okay, great.
Yes, so so that takes us to section 12A, and this was added by Commerce. They were looking at other bills related to insurance, specifically automobile insurance. And one of them had to do with the use of aftermarket parts. Another one had to do with the labor rates that are reimbursed by insurance companies. Bottom line is they're basically asking the department to do a study of all of the issues related to these topics and what Vermont can do to protect consumers and the market, the industry generally. So that's it. And then section 13 just specifies it's effective on passage. So again, I'm not aware of any additional fees or impact on the revenue. I haven't heard back from JFO, but that's an overview.
He's right here and he's gonna jump into the seat when we are,
Great.
yes, but I believe he also thinks there's no. Any questions or thoughts for Maria? Thanks, Maria. Really, really appreciate it. We'll see you later today.
Thank you.
Sure, great, thanks.
And Ted, do you wanna jump in the chair and share this with you?
Sure. Cabinet Joint Fiscal Office, I am here essentially to say that we took a look at this bill in the section by section primarily from Maria and do not anticipate a state fiscal impact on this one.
Great.
Yeah, there's no, the guarantor, the assessments for that are kind of paid to that guarantor association is a non-state entity, so. That's the short of it.
Thank you.
So specifically, the premium tax would be undisturbed.
Premium tax, I would have to look at that piece in
Because
particular.
that's the
again.
only connect I can think of.
Yeah, but
The
yeah,
sales tax on auto goods, but that's.
right.
Or if the definition
not to
of
study,
that
yeah.
insurance had changed, then the taxes related to those insurance payouts might have changed, but they didn't, so.
Yep.
Thank you.
Thank you.
Sure.
Would people like to wait until this afternoon to vote on this?
Do it now.
You know,
There's no impact, then let's just.
Happy to move it.
Representative Anthony.
Yes.
So we find S 95.
95 favorable, as amended.
And Representative Brannigan seconds. Any discussion? Would the clerk like a moment?
I think I'm ready.
Okay, cool. Then you are welcome to call the roll.
Andrews, yes. Anthony,
Yes.
Beck,
Yes.
Brannigan. Yes. Devereaux,
Yes.
Maslin. Meadows.
Yes.
Bodie. Sims.
Yes.
Taylor.
Yes.
Canfield.
Yes.
Kornheiser.
Yes.
12-0-0.
Thank you. Representative Anthony, can you report this? Thanks.
Thanks.
Okay, we are done until 1.